Harvest was founded 5 years ago with the objective of providing attractive income for Canadian investors. Canadians have spent 30, 40, 50 years building up assets, and they're now approaching or in retirement and looking for ways to extract or harvest income from those assets. What we're trying to do is provide products that are innovative and that are income generating to provide those sources of income for investors. The investment philosophy Harvest follows 3 key tenets. Number 1, very straightforward, simple, clear mandates. Number 2, limited size portfolios of 15 to 30 positions. We don't want any portfolio drift in our portfolios. We want the funds to represent exactly what the mandates are. And finally, income. All of our funds generate income, whether it's quarterly income or monthly income. We're trying to derive income from various sources in the market, whether it's healthcare, whether it's large cap US equities or Canadian stocks. We want to build portfolios that generate very attractive income for our investors. The closed-end industry is changing rapidly, and like the investment landscape, there's always going to continuously be changes, so you have to be on top of what's going on, what kind of issues are important to that at that point in time, what type of regulatory issues are affecting the market. It's really about being innovative, it's about being creative, it's about bringing products to the market that people require. So 5 years from now, it's hard to predict exactly what the closed-end market will look like, but there'll be the companies that are there are going to have to bring value-added products in order to gain some assets. The key difference between an ETF and a closed-end fund, they're both market-traded vehicles, but an ETF, like a mutual fund, is a continuous offering. So individuals are buying shares and selling shares each day, and whatever the net amount is, whether that's purchases or redemptions, is applied to the assets of the company or of the fund. A closed-end fund, like a stock IPO, like a company IPO, raises a finite amount of capital. The offering is closed at that point in time, and then the fund will start to trade on the market. So when individuals are buying and selling the shares, they're working with a finite pool of assets. But a closed-end fund, like an ETF or like a mutual fund, will have an objective. It will have income objectives and investment objectives, and will work towards those objectives. It's just a different model with regards to how it trades on the market.